Welcome back to Investing Talk Podcast. Today we're taking a close look at Sonnet BioTherapeutics, a company that has, experienced some truly dramatic swings recently. Our mission today is to cut through the noise, understand their core business, and really unpack the latest financial headlines and market sentiment around this biotechnology firm. We'll help you understand what's driving its recent performance and, maybe more importantly, what unique risks and opportunities might lie ahead for this particular player. Before we explore all of that for you, just a quick reminder to subscribe to our deep dives, like this content, and please leave a comment with your thoughts. And if you find our insights valuable, maybe consider buying us a coffee to support what we do. It really does help us keep delivering these analyses. Okay, so let's get into the heart of this company. What exactly does Sonnet BioTherapeutics do, and what's their big idea that sort of sets them apart?
Okay, so at its core, Sonnet BioTherapeutics is a clinical stage biopharmaceutical company. What that means for our listeners is they're really in that crucial phase of developing and testing drugs in human trials. They don't have products on the market yet. Their main focus is immuno-oncology, a field that's, incredibly important and evolving fast. It's all about using the body's own immune system to fight cancer.
Right, harnessing the immune system.
Exactly. And what's particularly noteworthy about Sonnet is their proprietary technology platform. It's called FHAB, fully human albumin binding. Now, this isn't just another platform. It's specifically designed to, extend the effective lifespan, the half-life, and enhance the potency of therapeutic proteins used in cancer treatment.
Okay, so making the drugs work better and last longer, basically.
That's the promise. Imagine a drug staying in your system longer, working harder right where it needs to. That's what FHAB aims to achieve.
So if they're still in clinical trials, how do they actually operate as a business then? Are they selling anything, or is it all based on, future potential?
That's a good question. Their business model is pretty standard for a company at this stage. They rely on moving their drug candidates successfully through these clinical trials. Once they hit what's called proof of concept, basically showing in early human studies that their drug works and is reasonably safe, they typically look for partnerships.
Partnerships, right.
Or licensing deals with much larger pharmaceutical companies, the big players who have the resources for the huge late-stage trials, regulatory hurdles, and actually selling the treatment. So for Sonnet, it's really about validating their tech and pipeline to attract those kinds of deals.
Okay, that makes sense. With that understanding, let's pivot to the numbers. Because this is where Sonnet's story gets, let's just say complicated. Their financial performance has been nothing short of a roller coaster. Looking at their latest revenue figures, they reported $1.02 million for fiscal year 2025. Now, that sounds maybe small, but it's an almost unbelievable increase, like 5,376% from the $18,630 they had in fiscal 2024. That's a staggering jump.
It certainly is a dramatic rebound. It catches your eye immediately.
Yeah.
But when we connect this to the bigger picture, it's really crucial to see the history here. Their revenues actually fell sharply in the years before 2024. They were at about $483,000 back in fiscal 21.
Okay.
Then dropped 27% in 22, 58% in 23, and a huge 87% drop in 24 before this recent surge.
So it's bouncing back from a very low point.
Exactly. So while 2025 shows that impressive percentage increase, it's recovering from almost nothing. And, this kind of massive percentage jump in a clinical stage company often signals a one-time thing, maybe an upfront payment from a new partnership or a milestone payment or even a grant.
Right, not necessarily recurring sales.
Precisely. It's vital to understand the source of that revenue to figure out if it's sustainable.
That makes perfect sense. A one-off payment is very different. So, okay, despite this incredible revenue jump, what about their profitability? Are they actually making money?
The short answer is no. They're still unprofitable, which, again, is quite common for clinical stage biotechs pouring money into R&D. But they have shown some improvement in narrowing their losses. Their earnings per share for fiscal 2025 improved to negative $3.53. That's quite a bit better than the negative $11.35 from the year before.
Okay, so moving in the right direction, at least on that metric.
It indicates they're becoming maybe a bit more efficient with spending, even if they aren't in the black yet.
Now, for a really critical piece of information, one that kind of casts a shadow over this whole story, as of early June 2025, Sonnet BioTherapeutics got a notice from Nasdaq about potential delisting. What exactly triggered that, and what does that mean for them?
Yeah, this immediately raises serious questions about their financial stability and, frankly, their future as a public company. The notice came because they weren't complying with Nasdaq's minimum stockholders' equity requirement. That's set at $2.5 million.
Okay.
As of March 31st, 2025, Sonnet reported equity of only about $662,000.
Wow. Okay, so way below the threshold.
Significantly below, yes. They have a deadline, July 14th, 2025, to submit a plan to get back into compliance. If Nasdaq accepts that plan, they might get another 180 days to actually meet the requirement.
That sounds like a really tight spot.
It's a very precarious position. Delisting can severely impact a company's ability to raise capital, its stock liquidity, and investor visibility. It's a major red flag.
Absolutely. So beyond just that equity issue, what else do their financials tell us about the company's overall health, its ability to keep the lights on and fund research?
Well, the financials also show negative EBITDA, that's earnings before interest, taxes, depreciation, and amortization of negative $13.77 million, and weak gross profit margins.
So still burning cash.
Right. Negative EBITDA basically means they're spending more cash than they're bringing in from operations, even before non-cash charges. It's typical for biotechs in development, sure, but combined with the delisting threat, it definitely amplifies the concern about their cash runway.
And what about valuation metrics, like PE or price to sales?
Well, their price-to-earnings ratio is around 0.85. But honestly, for an unprofitable company, PE ratios are often distorted or just not very meaningful.
Right.
What's maybe more indicative here is their price-to-sales ratio. It's currently at 0.75. Now, that is sharply down from previous years when it was way up over 50. A PS of 0.75 is incredibly low.
What does that signal?
It signals that the market assigns very little value to their current revenue, and maybe more importantly, their future sales potential. Especially with this immediate delisting threat hanging over them, it just screams market skepticism.
Okay, so we've definitely painted a picture of significant financial challenges here.
Mm-hmm.
But are there any, real strengths, anything positive that could balance this outlook for Sonnet?
Yes, despite the very real financial hurdles, there are some fundamental strengths to consider. Their proprietary FHAB platform itself, that's a potential significant competitive advantage in immuno-oncology. It's a unique approach, if they can validate it.
If it works, right?
If it works, that could really differentiate their therapies. They also have what people call early pipeline promise, meaning some of their drug candidates, while still early stage, are showing encouraging signs, some potential. And while the delisting notice is a huge negative right now, just being listed on Nasdaq has historically given them liquidity and visibility that smaller private biotechs don't have. Though, obviously, that advantage is very much at risk now.
So they have this promising tech.
Yeah.
But how does this position them in the broader biotech world? Immuno-oncology, as you said, it's super competitive, isn't it?
Oh, absolutely. Sonnet operates in an intensely competitive sector. You've got established giants like Moderna, now a leader in mRNA therapies with huge revenues and profits, and companies like Gilead Sciences, which has a broad portfolio including advanced CAR-T therapies and just massive cash flow.
Big players.
Very big players. They're well-funded, have mature drug pipelines, strong market presence. Sonnet's niche FHAB tech does offer a point of difference, but it faces incredibly steep competition from these well-resourced peers. Their path to actually gaining market share, even if they get a drug approved, would be really tough.
Given all this, what are the key things coming up? The potential catalysts or events that could really change their trajectory, for better or for worse?
Well, the key catalysts would definitely include successful clinical trial readouts, positive data validating the FHAB platform's efficacy and safety. That would be a potential game changer.
That's the big one.
That's the big one. There's also the possibility of new partnerships or licensing deals. If their early data looks compelling enough to attract interest from those larger pharma companies we talked about.
Right.
And of course, their quarterly earnings reports. Those will continue to give critical updates on their cash runway, basically, how long they can keep operating and their R&D progress. Investors will be watching those very closely.
And flipping that coin, what are the most immediate and impactful risks facing Sonnet right now?
The primary risks are sort of twofold, common in drug development, but really acute here. First, the inherent scientific and regulatory risks, clinical trial failures, unexpected side effects, regulatory hurdles from the FDA or others that could delay or even completely block approvals.
Standard biotech risks, but amplified.
Exactly. And second, and perhaps more immediate given the current situation, are the financial and market risks. That Nasdaq delisting risk is paramount. If they fail to regain compliance, it would almost certainly lead to further drops in liquidity to investor confidence and make it even harder to raise needed capital. And smaller biotechs like Sonnet are always vulnerable to tough market conditions impacting funding availability. A delisting would just make that so much worse.
Okay, so with all these dramatic ups and downs, this huge revenue jump on one hand, a delisting threat on the other, how is the market actually reacting? What's the feeling, the sentiment around Sonnet BioTherapeutics right now?
Well, the stock price tells a story. It's seen significant downward pressure, a return of negative, over 90% over the past year.
Ouch.
Yeah. It's currently trading near its 52-week low, around $1.08 per share as of early June. So that tells us the market has largely been very bearish. Interestingly, though, despite these really tough fundamentals, some technical sentiment indicators show, maybe surprisingly, some short-term optimism, almost a contrarian signal, though overall market fear remains pretty elevated, reflected in a fear rating on the broader Fear and Greed Index.
And what about analyst ratings? Sometimes those tell a different story.
They often do, and that's what's particularly striking here. It can be confusing for investors. While the stock price has really struggled, some professional analyst forecasts remain quite optimistic. We're talking price targets as high as $20 per share and a consensus buy rating among those who cover it.
$20 compared to about $1 now. That's a huge disconnect.
It's a massive disconnect. It suggests a fundamental divergence in thinking. Analysts might be focusing on the long-term potential of the FHAB platform, maybe assuming successful drug development, and perhaps even a lucrative buyout down the line, while the broader market seems laser-focused on the immediate financial distress and that very real delisting risk.
So those high targets need to be taken with a big grain of salt right now.
I would say absolutely. They appear quite disconnected from the current trading realities, especially with the Nasdaq notice and the weak operating results. Definitely view with caution. You also see this tension reflected in social media sentiment, lots of concern about the delisting, but also speculation about turnaround plays like reverse stock splits or finding new financing.
So wrapping this up, what does this all mean for you, the learner, trying to make sense of this? Sonnet BioTherapeutics is a really fascinating, maybe even a bit alarming case study in biotech volatility, isn't it? You've got this innovative technology platform, genuine scientific promise, maybe, and that significant recent revenue rebound hinting at some underlying value. But then on the other side, there's this really stark financial reality, the Nasdaq delisting notice hanging over them, persistent unprofitability.
Indeed. This company really represents a high-risk speculative opportunity. Any potential upside is tied almost entirely to future clinical trial outcomes and hitting those regulatory milestones. It powerfully illustrates the inherent volatility and, frankly, the profound downside risks that are typical of pre-commercial drug developers. Understanding their specific FHAB technology and the wider immuno-oncology market is crucial, yes. But it's just as important to recognize the severe financial headwinds they're sailing into right now. It is a classic high-reward, high-risk situation.
And it really raises that crucial question for anyone looking at this space. How much potential upside from a successful trial or a big partnership is actually enough to outweigh these very real, very immediate financial and delisting risks? It's a delicate balance to consider, requiring a deep dive into both the science and those stark financial realities. Well, thank you for joining us for this exploration of Sonnet BioTherapeutics. We hope this discussion helps you feel better informed about the complex dynamics often at play in the clinical stage biotech world.